Okay, so what I wanted to do is I wanted to take a minute and I wanted to go through the practice sheets for chapters 1 through 4. Now, we've only gone through chapters 1 and 2. We really haven't gone far enough yet for you to complete the entire practice sheets. Now, there's 3 of them, so you can get plenty of practice, but we haven't gone far enough yet to be able to complete a whole one. So I did at least want to take a minute and show it to you so that you're familiar with it and you see what we're doing. Okay, kind of start bringing some things together. Right now, you're probably looking and you're going, man, I'm kind of lost. It's okay. I don't blame you. But don't feel that way. It's going to come together. The whole thing's going to come together full circle. Okay. So far, what we've talked about is the accounting process. As far as we have a transaction, we take that transaction and we want to record it. That's a journal entry. So we record the transaction in our journal and we list the accounts that are being affected, the amounts and everything, the dates. And then we're going to post those to the ledger. Okay, we're going to basically copy them into the ledger. All we're going to do is basically what it tells us. It's saying credit cash for this much. So you're going to go into the cash account and under the credit side, you're going to put that figure. Okay, that's all you're going to do is just do what it tells us. Now, after usually a month goes by, a company will do what they call closing the books. This is when they tally everything up and they start comparing it to their goals, their budgets, their forecasts. They want to make sure that they're on track. You're going to have goals as a business, and the longer you wait to see if you're on track, the less time you're going to have to right the ship if you're not. So that's a problem. So on a monthly basis, you need to be doing trend analysis. You need to be looking at your budgets and making sure that you're hitting the goals you set to hit. For example, you have a sales goal. The sales goal, and I'll tell you right now, sales is the cornerstone of your business. Okay, if that's what you do is sell it, that's going to be the cornerstone because sales equates to revenue. Okay, and you're going to have goals for sales, goals for revenue, and from that revenue you're going to have expenses. These are all goals that you've got to keep track of. So every month you're going to close the books, tally everything up, and then you're going to compare it to your goals and make sure that you're on track. So how do we do that? That's the key. Once we get to that point, what do we do? And this is where the practice comes in. So let me share this with you real quick. So this is the worksheet, okay? Now, the thing about the worksheet is nobody else sees it but internal people, okay? This is not a document that gets shared. Whoever your accountants are, your accounting clerks, managers, they are the only ones that are privy to this information. This is confidential information. You do not share this with outside people, okay? Actually, when you're done with it, you can shred it, do whatever you want with it, but this is not a formal document that you show to somebody else. So we talked about taking the ledger, and the ledger, of course, when we post to it, the ledger is going to have a page for every account. So cash is going to have their own page, accounts receivable, their own page, prepaid rent, and so on down the line. And each one of these is going to have a balance in the account. Some accounts will have debit balances. Remember when we talked about normal balances? Some will have debit balances. Others will have credit balances. We're simply going to take and list all of the accounts under account title, and then we're going to put their balances here in the first 2 columns. Now, notice how this is broken up, okay? We've got 2 columns here. This is the trial balance columns. This is where we're going to do our trial balance. We talked about that in chapter 2, where we take and we just put all of the different accounts and their balances in the proper column, okay? When we get done doing that, at the bottom, it should equal, okay? If it doesn't equal, then there's a mistake someplace along the lines, and we talked about how to try to find your mistake. But if these two numbers don't equal, we've got a problem. And the trial balance, think of it as kind of playing like a video game, where when you played a video game, you'd get to a certain spot and it would remember that spot. And then as you went further, if your player was killed, you would go back to that spot. You wouldn't have to go back any further. And by having those, you didn't have to go all the way back to the beginning. Well, that's how this is. You don't want to get all the way to the end and then find out you've got a mistake. And then you've got to go through all of this. Find out right here with a trial balance. And now the only place you have to go to look for a mistake is from this point backwards, okay? So we do our trial balance. Now, in the practice sheets, I've given you all the balances for all the accounts already, and it balances, okay? So there you go. There's your balances right there. So we're in good shape. Now, what we're going to talk about in Chapter 3 is adjustments. Adjustments happen because we have to account for things that technically might not have happened yet, but we have to account for them. Remember the principle: expenses and revenues have to be recognized in the period that they either were earned or occurred, okay? So that means that there might be things that we haven't paid on, things that we haven't received, but technically the expense has been occurred or the revenue has been earned, so we have to recognize it anyways up to that last minute. So that's what adjustments are, and we'll talk about those in 3. Now, after we make the adjustments, we do another trial balance to make sure that it still balances, because we've just made changes to our accounts. So we've got to make sure that those changes balanced, okay? Now, technically, you can take your debits and credits under adjustments, add those up, and those should equal, okay? And remember, we're talking about an equation. Assets equals liabilities plus owner's equity, which means that everything we do on one side, we have to do on the other side, which means if I have debits that are being adjusted and credits that are being adjusted, those are both on opposite sides of the equal sign. They have to be equal. Otherwise, our equation won't balance anymore. So we do our adjusted trial balance, and those should be equal. Now, what's nice about this worksheet is the next step after we do our adjustments is to do our financial statements, okay? And there's 2 columns here for income statement, 2 columns here for the balance sheet. And we're going to just start carrying numbers over. Some of them go to the income statement. The rest go to the balance sheet. And you got to think about this for a minute. What is net income? It's revenue minus expenses. So what accounts are going to go into these 2 columns? Revenue and expenses. Everything else will go into this column over here, okay? So that's the worksheet that we're going to use to help finish closing the end of the month. Now let's go down a little bit further, because we're going to do the actual financial statements. The first one we're going to do is the income statement. Remember how we talked about this? They have to be done in their proper order. So here's the income statement. The income statement starts with revenue minus expenses gives you net income, and you're going to have to fill this out. Okay, you're going to have to recognize which ones were the expenses, what was the service revenue, and then total expense. Now, formatting is important here, okay? This is not debits and credits. A lot of people get that confused. These are not debits. These are not credits. On a financial statement, you've got subtotals and totals, okay? Also, see the colon? That means that there's not a number that comes after it. So you shouldn't be writing anything up here. Don't write anything up here. Nothing goes there. expenses, nothing goes here, okay? You're going to take service revenue, and you're going to put service revenue here because it is the final total. Now, there's going to be more than one expense. So you're going to put the expenses on each line, and you're going to put them in the subtotal column. And then you're going to put total expenses right here. So now you're going to have revenue minus expenses. This number right here is going to be your net income. Okay, so that's the income statement. Now, remember what we said. We've got to take net income and use it to calculate the updated statement of owner's equity. So what we're going to do is we're going to take the beginning balance, and that's going to go right here. Okay, that's the beginning balance as of October 1st. That goes here. The net income that we derived from this statement goes here. Okay, so that's the starting balance. Net income is an addition, less withdrawals. If they took any withdrawals out, we're going to subtract them. So whatever we have for withdrawals, we're going to write it here, and we're going to put it in parentheses. That shows it's a negative. And then just do the math. Starting balance plus net income minus withdrawals. There's the new, as of October 31st, capital for the Tom Drum Company. Okay. Now we're going to do the balance sheet. The balance sheet, and here again, now if we go back to the worksheet, okay, what we're going to learn is everything that goes into these two columns right here under income statement is what goes on your income statement. Everything that goes over here to the balance sheet columns is going to go to the balance sheet. Not everything here goes to these two columns or these two columns. For this one, everything from service revenue down is going to go under income statement, and everything from withdrawals up is going to go to the balance sheet. Okay, so that's the difference. Okay, so now everything from the balance sheet that you put there, you just basically copy it onto here. So you're going to have all of your assets, and again, subtotals and totals, cash, accounts receivable, all these things go here. Total current assets go here. Okay, equipment less accumulated depreciation. Let's talk about that for a minute. Okay, let's talk about a couple things for a minute. First of all, a current asset. A current asset is any asset that can be turned into cash within a year. Okay, within a year, it's considered a current asset. Anything that you're going to have for more than a year would be considered a long-term asset. So equipment, for example, is considered more of a long-term asset. These are your current assets: cash, accounts receivable, prepaid rent, supplies. Those are going to be used in a year. So we're going to do our current assets, list them here in this column, subtotal, total them here. Okay. And then our equipment is going to go here. Now, here's how this works. Our equipment is put on the books at what we paid for it. Now, that could mean the amount we paid plus transportation plus setup fees. All that can be included in the final valuation of the equipment. However, it depreciates over time, and we're going to talk about depreciation in a much later chapter. For now, all we need to know is this number will never change. We never change the value of the equipment. Instead, we're going to subtract accumulated depreciation. So we have the value of the equipment plus our minus depreciation. So this will be in parenthesis, okay? And then you're going to put that total here. Now that's called book value. So cost new minus depreciation, there's your book value. Now you're going to add current assets to long-term, or in this case, equipment, and you're going to come up with your total assets. That's the important number. There's our assets. look at this as the equation, assets equal liabilities plus owner's equity. Here's the first part of it. Now over here, we're going to have current liabilities, and current liabilities, just as the term implies, current liabilities simply means these are liabilities that are going to come due within a year. So we're going to list those here. And one of them I gave you, unearned service revenue. So you'll list those numbers here. And then total current liabilities will go here. The owner's equity, okay, this is a heading. There's no numbers that goes here. This is a heading. There's no numbers that go here. They're blank. Okay, so we're going to put down the Tama Drum capital amount that we determined up here. Okay, we're going to take this amount and we're going to put it right here. So now we're going to have total liabilities plus owner's equity. We're going to add those together, and there's our total liabilities and owner's equity. Now, based on our equation, this number and this number should equal. Okay, so there's our statements, and all of this information, everything for these three documents can be taken right from here. It's all here and here, so it's all going to be there. Okay. Now, once we do our adjustments, the adjustments are only done on the worksheet. Okay, these balances right here are coming from the worksheet, but if we go into our ledger, that's not the balances. The balances in the ledger are these over here. So we've got to go in and journalize these adjustments. Okay. So that's what this is. This is journalizing the adjustments. And we'll talk about adjustments, as I said, in chapter 3. So don't worry too much about this just yet. But we're going to journalize the adjustments so that we can post them to the ledger, and then the ledger will match the worksheet. And then we're going to close. Now, closing entries is chapter 4. Okay, when we get to that point, we'll talk about it, but this is how we close the books. Okay, we're going to move a bunch of accounts and close a bunch of accounts because we want to start them at 0 on the first day of the next month. For example, revenue. Okay, I want to start with 0 in my revenue account on the first day of the month so that I can keep track of what my revenue was for that month. Same thing with expenses, okay? So that's how we're going to do that. We'll talk about that in chapter 4. Now, down here are the instructions, okay? Here's your adjusting entries. These explain what needs to be adjusted. And these right here, these adjustments here can be found up here under adjustments. So here's adjustments. This is where they can be found. And we'll talk about that when we get to it. And then just some basic instructions, okay? So this is how we're going to conclude chapters 1 through 4. There are 3 of these practice sets, okay? So you can practice on all 3 of them and get a good feel for it so that, you know, when the test comes along, you'll be fine. Okay, so that is the practice for chapters 1 through 4. For now, just kind of pay attention to the trial balance. We're going to talk about this in chapter 3, and then we'll finish it out after that in chapter 4. Okay, so that is all for now. So have a good day.